Morning traders, today is Friday the 11th of November. Happy Veterans Day, of which I'm one too. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Overall, we're whipsawing. We've been back and forth this week. Folks know it. Yesterday's action obviously was a whipsaw off of Wednesday's action. Very strong, of course, yesterday. We noted that we were expecting a lot of volatility yesterday, and sure enough, the market delivered to the upside. Because of that, the short-term and intermediate-term models, they've turned long again. We're on day one. The long-term model is transitioning long, but it does take several days, 4 to 7 days on average. So just be aware of that. We could fail. We have failed many times as the long model starts its journey to confirm the long side. So keep your time frames relatively short. As stated numerous times over the past week, we're at transition in the overall long-term model. This will drive back and forth action. Of course, today is another consolidation anticipation day, but we also could see a move to the upside. Given that, if whipsaws frustrate you, my suggestion is that you simply increase your time scale in your paper trades. Move off the intraday attempts to catch the falling knife. I know we all want to put our capital to work on paper, of course. But the big deal here is that with these whipsaw markets and with the choppiness and the fact that we are in a downtrend, whether or not you want to acknowledge it, we're in a bull cycle within a larger bear cycle. That is going to give us those whipsaws, so be aware of that. So I suggest that you look at end-of-day valuations, and that may take out some of the intraday frustration that you may be having. Plus GEX remains up at 4,100, has not moved. It's been solid. That is the near-term target. Minus GEX has been bouncing between 35 and 3,600 in the SPX and has resumed that 3,600 line, which is to be expected. Note that the gains up at the 4,100 line dominate everything. Yesterday's action clearly shows a lot of calls going in at the 4,100 line, and that is the near-term target. Excuse me. The expected move today, open, high, low, close, is still quite elevated. Yesterday was 5.5% was the prediction. Today is over 3%. Volatility does cut both ways. We could give a lot of what we saw yesterday back. We'll just have to wait and see. 39.35 is pushing the top of our transition range right now. If we fall below this, we need to remain in the upper range for the bulls to have any chance of springboarding into next week. If we lose this and go into the lower transition, down to 38 and below 38, the bears will be emboldened and the market again begins to flip to the downside. So just keep aware of that transition range. As I said, the market model, as far as the cumulative tick is concerned, we've resumed this railroad track up. I will note, though, that we were in a railroad track down into the close 2 days ago. So with Wednesday's action, this is a hard reversal. I'm suspect of hard reversals. I like intraday reversals, not out of the open. These often are opportunistic and are not really a continuation type thing. So I'm a little cautious here, and I would urge everyone here to just go slow. If this is a true Christmas rally start, etc., we'll have plenty of opportunities to participate on the upside. Key levels, 4,100 plus GEX, 4,000 it was 3,000 yesterday for POI. We've moved back up. This has nothing to do with Gamma or Delta or any of the Greeks. It's purely a metric of where are people putting their puts and their calls. And with the dancing around that we're seeing, where we saw some 3,000s get closed yesterday, and we saw 4,000s actually open up on the put side, which has given us this. But net balance is on the call dominance side for deltas, and that's constructive. 3,600 again, up from 35. We're moving up the chains. This overall in isolation could be considered bullish. As I said, the expected open, high, low, close move is still above 3%. Just take note of that. Taking a look at the weeklies here, yellow line is where we closed yesterday. This is where we're looking at a shift in moneyness in the PM settled. You can see the 4,000 line is pretty dominant on the PM settled. I'll talk about liquidity here on the overall complex. These are liquid. The PMs tend to move around quite a bit, and I think are indicative of how people use to play the shorter terms. I want to note all of the green here. This is a very different change than what we had yesterday. We talked about it yesterday. And the takeaway is that we're in a call-dominated delta environment. As these numbers grow, we'll be more and more in that delta environment, and that could be a good catalyst to move higher. We do see charm flows on the positive side pushing us upward into next week, at least through Tuesday or Wednesday, where we have a major expiry in the VIX, and so we'll have to wait and see how things pan out today and as well as Monday. To the downside, here's that JPM 38.35 sitting down here, largely illiquid, but just want everyone to be aware that it does exist. That's out there. And you can see pretty loose under 3,900 all the way on down. So just be aware if we slip down below that 3,900 line, things could get a little dicey. 0 DTE 39.35 is what we're calling the top of the transition for the 0 DTE. You can see that 4,000 line is pretty dominant. This is what's coming off today, right? So this is the 0 DTE. Very, very strong, very positive. So we have a lot of calls that are vaporizing, and we could see if we start dropping back on monetization here, which could propel us down even faster. The 1 DTE 40.10 is where we are projected to be the high side for today. So this will be the dominant line as of the before market open data. I think it's going to be interesting to see just how far down we can go. 38.50 is really the downside line, and you can see it's the transition all the way on down through today is pretty poor. But look, call dominated all the way on down. So 40.10 would be an upside. Being underneath that into the close would be a natural, of course. Livermore number at 4,000, all realistic. 39.60, 39.50, and then 3,900. You can see those key lines there, and want everyone to be aware of that. When we take a look at the combo is just a huge change from yesterday. So upside 40.26 is where we see moneyness starting to flip in the combined SPX AM and PM settled. This 4,000, as I said earlier, in the PM it's material, but when we combine the PM and the AM, largely illiquid here, and we've seen this. It's been persisting. This 4,000 strike has been persisting since May in various forms, but the key takeaway is we're not expecting a lot of contribution. You can see there's net call on this. It flips back and forth between that call and net put. But the key takeaway here is that we're not going to see a lot of contribution in change. We do see contribution in overall charm flows, and so that'll be material as we go through time here, and just be aware of that. So here we are, yellow line, it's our close yesterday. Dominated on the positive call side for the deltas. This is a major change from yesterday. I want everyone to be aware of that. Here's that 38.35 JPM, which doesn't roll until the end of December, but you can see it's a key thing there. And as we get closer to it, it will, excuse me, it will also have a downside impact. Excuse me. The 38.95. 3,900 line, you can see a real character change in gamma as we come down below that too, so we want to pay attention to that. But above this 39.25 all the way on up, huge magnitudes of calls here. So the call gamma all the way on up is very, very significant. I want everyone to be aware of that. Taking a look at the delta moneyness, we're projecting still upward trends in the marketplace. Still want to highlight this out of the money put transition point, very, very low. It's very, very interesting that the rubber band is still being pushed down. I've got a note down here for you to take a look at. But in general, we are still showing that the overall moneyness trend is still pushing us to the upside, and monetization potentially could drive us upward. This is what I was talking about at the open. The plus GEX line up here at 4,100 grew a large amount. I would urge everyone to go back and look at yesterday's presentation, just dominating the air around it. So we had a lot of calls being added at 41, and this is clearly, there's no argument here that this is the upside target for the markets. 35 has transitioned back up here to 36, and you can see that the magnitudes have dropped. Part of the reason the magnitudes would drop is because the price moved up. Remember, gamma is spot price sensitive. But the other part is that there was some monetization that occurred here, and that's the imbalance in part that we're seeing here. And if you go take a look at the OI change overnight when it posts, I have access to early data, so I can see some things. But we also had some monetization. These people are short-term getting out of the 35, 3600 market. We are here at 39.56. Note we're up in that positive gamma territory, so we're above the transition area. Your eye can clearly see, the back and forth nature here. Look at 3900, also a fairly significant amount as a line. So I'm going to call the 3900 line as kind of our short-term line in the sand to the downside. We lose that, we don't have a lot going on to keep us north. So just be aware of that. So that's it for today. If you like today's commentary, please join us at GammaEdge.us. Click on that. Click on the pricing tab. Fill out the blanks and come on in, kick the tires, 14-day free trial. All the tools turned on, and great group of traders who are there and willing to help teach you what they see in this stuff. Follow us on Twitter at GammaEdges with an S, and then here on YouTube, of course. Smash that like button if you like today's content. Give me immediate feedback, and then follow us, because when you do, you'll get notified when I post and Michael posts and Taylor posts. We try to do 2 videos a day. And so that'll give you some of our views on the overall market. So with that, I bid you farewell. Again, happy Veterans Day. Make it a great weekend. Make it a great Friday. And we'll see you Sunday night at the open mic. Thanks.